Power Talk, brought to you by ABB. Power and productivity for a better world.
Just to start off with, that piece we saw there, Christoph Frey, saying the idea of packaging 2,000 villages, say, and selling them to investors, sounds like a good idea. Is it really going to work?
I must say, I think it's a pipe dream. And if I may explain why. What he's talking about is a blanket electrification of 1,000 or more villages, whether they want electricity or not, whether they can afford electricity or not. The cost of these things is enormous if you're going to provide it to everybody. Would it not be better to start in a small way? Electrify those who want it, who are ready for it, who can use it, who have the money to pay for it, and slowly expand the levels of electrification wider and wider as demand grows, instead of trying to pay for it all at once.
So pipe dream, you say. But Brian, it seems that this is at the very heart of the problems that Africa has of putting its energy into resources.
Yeah, what we need is I totally agree with Chris, that people need to want the energy. But by doing this inventory, we can find out which villages want energy, what form of energy they want, how they want to put it together, and then we can package that, because investors are not interested in the tiny investment of a single village. So by getting them together, coalescing it, we can get to a substantial investment package, and then we can say to investors, here you are, come in, let's roll. We know the villagers want it, we know what they want and what forms of energy they want, and then we can start doing something substantial.
Okay, gentlemen, hold it there. A lot more talk to go. We're going to be looking at the state of energy production in the whole of Africa, and we're starting off with Southern Africa. Just take a look to see how the energy stacks up.
South Africa is the big daddy in power generation, producing about 40,000 megawatts for 48 million people, 90% of it coming from coal. But even this giant has fallen foul of power cuts in the last 3 years. There are plans to double output in the next 15 years, but many feel even that won't be enough. Zimbabwe's power generation has struggled against the economic meltdown over the last decade. Everything from the lack of coal to rundown rails have dragged power production down to around 1,600 megawatts, about half of what the country needs. Zambia is not that better off, and its 1,800 megawatts is under pressure from the demands of a booming copper mining industry. The government plans building this year a new $1.5 billion power station generating 700 more megawatts. Namibia imports most of its power from South Africa. Its homegrown 380 megawatts are generated by coal, hydro and diesel. It is now looking at alternative energy, including gas to power.
There's Southern Africa, Chris. I mean, do you think Southern Africa is a powerhouse? It's better placed with infrastructure than maybe the rest of the continent?
No doubt about it. This is an industrialized South, and this is the industrialized powerhouse of sub-Saharan Africa, along with one or two other African countries. As I think has been noted, it's a continent and a subcontinent rich in energy, but rather poor in getting that energy and converting it to electricity, transmitting it and distributing to where it's needed and where it's wanted.
So Brian, I mean, this is a region with a long legacy of very, very high quality infrastructure, particularly in this country. Why is it then that we're still suffering power cuts across the entire region, as you've seen?
Well, we're struggling from a point of view of power generation. That's really the challenge. And that's because we've got economies that have been in transition. In South Africa itself, we decided some years ago, the government decided that they wanted to liberalise the power generation market. They told Eskom, don't build any more power stations, we'll wait for the private sector to come in. So there was a hiatus there with no generation built. Similarly, we know what the problems are in Zimbabwe. Investor confidence is not there, so they're not building generation in Zimbabwe. Mozambique has been coming off a very low base, and it's growing, but it's not happening because the market is not big enough to justify power generation. And the same is true in Namibia. Namibia also, the overall market is not big enough to justify the economies of scale needed to attract large investors. Botswana, they've been trying for quite a while to get a coal-fired power station, get up and running there, But that's predicated on the assumption that a sizable portion of the output from that power station will in fact be sold to South Africa. And again, the problem there has been that South Africa has not been ready to, the legislation framework has not been ready to embrace independent power producers into the system. So the infrastructure in terms of moving the power around, Southern Africa through the Southern African Power Pool is actually blessed with a large number of interconnectors between the various countries and is able to move the power around. There just isn't sufficient power to actually move around. That's one of the
But I must say that I think there are also problems not just in the generation sector. In the transmission and distribution sector, Brian has mentioned, we do have these interconnects. But within South Africa, for example, one of the big problems facing the country is the distribution sector. And we've been looking at restructuring the electricity distribution sector for the last 20 years now. And in the end, we've achieved nothing. But this 20 years of uncertainty has resulted in a reluctance by the electricity distributors, that means municipal and Eskom distributors, to invest in maintenance and refurbishment of distribution infrastructure as a result of this very uncertainty caused by the investigations into the restructuring. And after 20 years, we've achieved nothing except a neglect of investment, which is having severe consequences, not related to generation, but related to getting that power to the places where it is used.
Brian, I mean, this investment that everybody says is a dearth of, where's it going to come from? Is it going to come from the governments of Africa, or is it going to come from private and the banks?
Well, it has to be a combination. The governments have to create the enabling environment to to allow the private investors to come in. What I mean by enabling environment, they've got to create the legislative framework that encourages them, but also protects them, because investors are looking for a couple of key things. Firstly, they want to know, what is the trading environment? How will I be able to commercially interact? So that's got to be very clear. The second thing they want to know is my profits. What's going to happen to my profits? Do I have to reinvest them locally? Will I be able to repatriate them? What happens there? The third thing they want to know, what's going to happen to the physical assets that I put on the ground? Is my property going to be protected, or is it going to suddenly be nationalized and I'm going to walk away with 80 cents in the dollar or whatever from that? And the last thing they want to know is my intellectual property going to be protected, because they also make large investments. And that was one of the things that bedeviled China in the early years of China's growth, that people were suspicious of China stealing their intellectual property. In practice now, we're competing against China. People want to invest. They look at what they can do in Africa, they look at what they can do in China, what can they do in India, what can they do in Southeast Asia, and we have to be the investment destination of choice, and there's tough competition out there.
Chris, I mean, how much is time running out for this kind of long-term, solid investment that Africa needs in its power?
Well, let's just look at the South African situation first, and time is running out. Eskom has embarked on a massive build program, even before it had a funding plan in place, and it had intended to look for private capital, for example, an equity partner in Kaswili Power Station, but was unable to find it. That's not because I think capital is unwilling to invest in this area, but I think, as Brian pointed out, the regulatory framework, the legal framework is certainly not ready for it. And I think a lot of work has got to be done, and time is certainly running out in South Africa. In terms of Africa, it's somewhat different in the sense that in many parts of Africa, there is plenty of energy. I give you an example in the DRC with the Congo River. There's plenty of energy. In fact, the problem is not the amount of energy available, it's the amount of demand for electricity is not there. And in many African countries, demand is very low.
Brian, I mean, we were talking about a radical plan to help with this investment in power infrastructure before the show. I mean, you said maybe the banks could be brought in some way.
What I'm really saying is that if we look at the way that the infrastructure was built in Western Europe, in North America, many years ago, the rules of engagement were completely different to the rules that are applied today. Today we're looking for returns on investment that have got to be short and sharp, and if it's got more than a 3 or 5 year payback period, we're not interested, all that kind of thing. And maybe it's going to require something radical. Maybe we should say to the banking sector that in future, for a banking license, you need to have a portion of your portfolio, 5% or whatever, invested in development infrastructure projects, which will have substantially longer payback periods, 20, 25 years. And that will need to be coupled with sound policies from governments who are going to back those to give that assurance that that investment period is rational and is sensible and is secure.